it's Monica, president of the Guru Intelligence Network here on another 5M Monday. So today is our last of our 5M Monday series. Today we're going to be talking about margin of safety, the buy price, and this is an exciting one because we spent all this time working on our mindset of finding a company with meaning to us and good management and has a good moat around it, and now we want to buy. So what price do we need to buy it at? We'll be talking about that today. So if you're liking these videos, please like, share, subscribe, and stay tuned because I'm starting a new series in a couple of weeks. It's called Investment Knowledge Check, and I'm going to be looking behind the headlines into things that we need to be watching for as investors and paying attention to, because they could be giving us a clue as to where the market's heading, and that could give us the ability to make some really good decisions with respect to our investments. So Warren Buffett, our favorite 5M strategy guy, he's the one who actually created this strategy along with his partner, Charlie Munger. And he, of course, says never pay full price for anything. So today we're going to be finding out what that actually means. So in order to not pay full price for everything, we actually need to know where the price should be at. And with stocks, they're not always at the price that they should be. So we need to figure out what the value of the company is. And then because we're value investors, we're looking for a margin of safety price. So in this case, we're looking at about a 50% discount. And there are three calculations we can use to determine what the value of a company is. And those are 10 cap, margin of safety, and 8-year payback time. So I'm going to go through each one of these individually. So the 10 cap, so if you're a real estate investor like I am, you will have heard the capitalization rate. And this is actually the same thing. We do use it on stocks as well. Because as value investors, we actually view buying a stock as if you're buying real estate. So with a real estate investment, many real estate investors will be quite happy with a return or capitalization of 5% on their real estate. But as stock investors, we want a 10% return because we're looking at having a margin of safety on our investment, just in case we get those numbers a little bit wrong. And so we're going to be doing a 10 cap evaluation. So that's basically taking the owner's earnings, and owner's earnings is a calculation based on what comes in and minus certain expenses as well. And we're going to divide that by 0.1, which will give us our factor of 10. And then divide that number by the outstanding shares. So that gives us our 10 cap number. Then we're going to also use a margin of safety number. So this margin of safety calculation is 50% of the sticker price. So sticker price is basically the retail price of the stock. So if you were to buy the company at the price that it's actually worth at, or for example, if you want to think of it as a sticker on a car, if you're going into a car dealership to buy a car, you'll see a retail price on the sticker of the car. Now, we know that we can do some haggling on that car and get that price down. So we're looking at getting that stock down to about 50% of the retail price, or the sticker price in this case. So we need to calculate what that sticker price is, and that's just taking the price over earnings times the earnings per share value, and then simply dividing it by 2, and then we've got a margin of safety price. Then the third calculation is our 8-year payback time. So payback time is simply just the number of years it takes for you to get your investment back from the earnings of the company. So this is kind of an involved calculation. There are calculators out there that can help you do this really quickly. So just for saving time here, I boiled it down to something really simple for you. So it's basically taking the earnings trailing 12 months times the future growth rate. So the future growth rate is a little bit subjective. You can get an analysis point of view on that. A lot of times analysts, I find, have their future growth rates little on the high end because they're only looking at maybe the next 2 years or so in future growth. But value investors are looking much farther than that. We're looking at 10 years plus. So I never like to go over 15% on my growth rate of a company. If you're looking at a company where the analysts say that the rate of return is about 7% or less, you might want to rethink on why you want to invest in this company. And basically, all we want to do is take the earnings times the future growth rate for every year and then add it up until we get the 10 cap. And so how many years did it take to actually get that 10 cap price? Because that'll tell you whether that price is too high, and we're looking for a price that'll get us there in 8 years or less. So what do we do with these three numbers once we have them? Well, we want to pick the highest of the three just to get us started. And in this market where most of the stocks are actually quite high, and you're going to find maybe many of the stocks you're looking at are overpriced, you're going to want to take the highest of the three so that you can start buying the stock. So once the prices start going down, and they will, based on what we're seeing now with the economy, then you can go in there and scoop up those prices, scoop up those stocks when the price hits that. And if the price keeps going down, that's awesome, because we can tranche in and buy more slices of that stock at a lower price, and that'll bring our overall buy price down for all of the stocks. So Warren Buffett says the three most important words are margin of safety. And I love that. That's basically him saying buy low, sell high. It's really a simple concept in all kinds of investing. So keep that in mind when you're out there buying and selling stocks. If you want to learn more about the 5M strategy and all the details and tips and tricks that I use to go in and purchase stocks, visit me on www.guruintelligencenetwork.com. If you are really interested in taking the course, just contact me directly at monica@guruintelligencenetwork.com, and we can set up a meeting for you and discuss how that looks for you. And I will see you in a couple of weeks. I'm really excited to be starting a new series which talks about basically what's behind the curtain with the news headlines. What are the fundamentals of the economy doing that might impact our stocks? Maybe a bit of a rant here and there, and I really think you're going to enjoy it. I hope you have a really good Monday and a really good week, and we will see you again in a couple of weeks' time. Bye.